All right, welcome back. It's been a little bit. I've been doing a lot of traveling. Had Mexico trip, golf trip, dad's birthday, sister's wedding, on top of work and everything else. So it's been busy, but I am back and I'm hoping to be a little bit more active on the YouTube, 2 videos a week. A lot of volatility in the last couple of weeks, so let's kind of do a little breakdown of what has happened and more importantly what is to come, because we're at a pretty big point here in the market, but we're seeing a nice healthy pullback right now. If we look at the chart here, the NASDAQ having a nice pullback here. It was about 7 days in a row where it was pretty nasty, and last Friday was not a good day. The S&P similar. And we're having some stocks like Nvidia. Nvidia had a 10% down day on Friday. Nice little bounce here today. Microsoft is around $400. So we're seeing a nice healthy pullback. The SMH got under $200. So to me, this is refreshing because this trend here where it's just vertical is not what you want to see unless you're going to retire next week. I'm a buyer of stocks. Yes, I want my portfolio to go up. But I've got a long career ahead of me, so for me personally, I want to buy things and I want to buy them when they're on sale. And the last few months, there hasn't been a lot of discounts. The last discounts we saw was in October, and that was the last time I was heavily buying. All this run up here, I've been raising cash, waiting for our next opportunity, which I think we're getting close. So on top of that, we do have interest rates rising with the expectation of inflation coming back. So we've seen the 10-year yield rise quite a bit since January. So this year we've gone from 3.8 to 4.6. So that's quite the climb, and that's without the Fed raising rates. That's just the markets dictating, the bond market dictating interest rates. We're also seeing the dollar have a nice rise back up, which is going to also put pressure on stocks. And we've seen oil have some volatility. There's geopolitical stuff going on. Oil's made a run from 70 to 86. We've talked about all these things in previous videos, but these are the big anchors to the market. So the market's running out of steam because it can't fight these things that were reversing. They were going down, now they're going back up. So that means higher for longer. The Fed's been giving multiple speeches, and they are saying we're data dependent and the data is not looking so good. It was looking good, but now it's not looking so hot. So the market's having to reprice. We've talked about all this. It's just starting to show in the actual stock market. We've seen these changes in the market happen. Now the market's repricing. So the next big catalyst for the market is going to be earnings. So we do have this week, we've got Tesla, Amazon, Meta, Google, Microsoft, big tech earnings this week. We did have the banks have earnings a week or 2 weeks ago. Their numbers look good, but we did see a rise in their credit write-off. So defaults on some of their credit, some of their loans, they're starting to write off some of those. So Joe Schmo isn't paying his loan, just write it off, let's move on. Netflix had earnings last week. Their numbers were good, they beat. Their guidance was good, but not great. And one thing that was interesting is they're no longer announcing their newly acquired users for the quarter, which I understand, especially something like Netflix. A lot of the streaming services, it's a lot of churn. So someone might be there for the summer and then they cut it in the winter or vice versa, whatever. So they're no longer going to announce how many new users they have. Maybe they're starting to see less growth and they don't want to compare those numbers to previous quarters. Who knows? But Netflix will be fine. They'll monetize in other ways. But as we've had this down here for a while, there's more pressure coming to interest rate sensitive sectors. Rate cuts are looking less likely in the near future, and the market needs to reprice. So that's been up there for months, and the market is starting to reflect that because nothing has really changed in the market other than the rate cut expectations. So big earnings this week. When it comes to action items, we are going to be watching the earnings, and these 3 have been here. We've talked about building cash and being ready for the next pullback, which we are at the start of a pullback, hopefully. Maybe we shoot back up. We're due for a little bounce. Maybe we go back to all-time highs. Who knows? These earnings could be a great catalyst to push us back up, or they could be a catalyst to continue the trend downward, the recent trend downward. I've been selling options to hedge and build my positions. A stock like Enphase, I'm basically selling at the money calls. I don't expect Enphase to report good numbers or good guidance. So I expect the stock to sell off, and if it does, my covered calls will make money. And if Enphase rips, I'm honestly okay letting go of some of my shares at these strike prices because I'm collecting so much premium, and I've been doing this for the last couple of months, and Enphase has been going nowhere. So it's been a way for me to build my cash portfolio to be ready to buy some more Amazon or the falling knife that is Tesla. I haven't been buying aggressively, besides I've been nibbling on Tesla, but like I said, it's a falling knife. They've got earnings tomorrow. Numbers are probably going to be bad, and there's probably going to be another opportunity to buy. So I have my shopping list ready, and I'm getting ready to start buying. Maybe this week I will share my shopping list. I haven't wrote it down. I have it mentally in my head, but I know I want to purchase some more of the Qs. And I want to buy some Qs starting at 400 and below. I want to buy some more Amazon. I want Amazon to fill this gap here around 160, and that's where I'd like to buy another third. And SMH, I'd like to get some more SMH in the 180s. So those are the three at the top of my list. Nvidia looks interesting if we can get another couple flushes. Under 700 bucks, I'm okay holding some Nvidia. I'd love to own some under 600. We're really going to need a market pullback for us to get down there. And if Nvidia drops significantly, it's going to drag the SMH, and I will probably buy more heavily into the basket than Nvidia itself. But I have my list, and I'm waiting to see what opportunities the market will give me. A lot of volatility coming up with earnings, so I will keep you guys posted on what's going on. Stay tuned for a Amazon earnings video and a Tesla earnings video. But that's all I got for you guys today. Quick and dirty market update. I am back. You'll see me more active. Hope everyone's been doing good. But these are the times that I get a little bit more excited because I can buy things that I like on the cheap. Yeah, I don't feel good looking at my Tesla position here, but I do like when I go to buy something that things are cheaper. So I've been talking for a while, market running out of steam, summer slump. I've been giving some warnings in some of my YouTube videos, and we're starting to see the market cool off a little bit. Hopefully we can keep these prices coming down so we have better entries. Again, unless you're retiring tomorrow or next month, you want to embrace the volatility and take advantage when the market gives you some downside. So that's all I got for you guys today. Get your shopping list ready, and let's see what the market gives us. That's all I got. Peace out.